So I just placed a pending order on USDCHF, and I'll tell you guys the reason why I feel like this trade will actually do well. I'll tell you guys the technical analysis, what I'm seeing in this market right now, and I'll explain the thought process that led me to entering this trade right now. But however, before I do that, yesterday I taught something in the class to our physical students that I feel like I should just teach you guys publicly. I know that they paid for the knowledge, but however, I just feel like teaching you guys that part of the session for free, because I feel like it will help you guys a lot, because a lot of you feel like you already know how to trade forex. But let's be sincere, many of you don't know the basics. You know, one of the things that a structured mentorship program will do for you is to start from the basics for you. You understand, where you start from understanding the basic of even support and resistance. Some of you just jumps straight into something like let's say SMC trading, and you didn't get to learn the basics, you didn't get to learn the basic theories that move the market, and you just jump straight into learning SMC, which in my opinion is the icing on the cake. If you've not learned basic support and resistance, understand how liquidity works, where the market is moving to, distribution, accumulation, basic principles that makes the market work, trust me when I say the icing on the cake, which is the SMC concept, which is algorithmic approaches to trading and different kind of seemingly advanced concepts to trading. You might confuse yourself. Let me teach you guys something. Now pay attention to what I want to show you guys right now. Now this is the basic knowledge of support and resistance that you know. Okay, this being support, resistance, and every time the market comes to resistance, what you want to do, you want to sell it into the zone, then buy another support, like that. This is the basic knowledge of support and resistance you know. But let me teach you guys something that many people don't talk about mainstream. Now the concept of support and resistance is the basic concept of forex market, and understanding this skill, understanding this, what is a valid high and what is a valid low, would actually help you guys a lot. Now for instance, something like this, a trend like this now, and let's say we see something like this. Now if I ask you now to mark out the support levels here, you obviously mark out here, mark here, mark here, mark here, mark here, mark here. Sorry, not here now, sorry. These are the levels you mark out as the valid support levels: 1, 2, 3, 4, 5. However, what if I tell you that this last 3 levels, this, and this, are actually not support levels? Now let me explain that. Let me explain this. Don't be shocked. Okay, let me explain it to you. Now understand that for you to say that a level is a valid support level means that that level actually created a new high. For us to call any level a valid support level means that that level actually gave us a new high. So for us to count this as a valid level, it must break this previous resistance level here. For us to say that this third support here is a valid support, it must give us a new high. If the market, or if it fails to give us a new high, then it is a minor support. It's not a significant support level. So for instance, we say the market does this and then starts doing something like this. Now this is the level where many people remember that this was the most previous support level that we had, which I usually call reference support levels. Okay, I call them reference levels. Any level that gives me a new high or a new low, I call it a reference level. Okay, so you can choose to also call it that. Okay, so this becomes my reference support level, this level right here. Any other thing, and this for instance now becomes my reference high. Okay, this becomes my reference high. Now anything in between this level, regardless of what price action is doing here, does not count for me. I'm not interested. For me, it is useless. It's a waste of my time. It is what we call market noise. This is the level where many people, once they see this, they see this, they see this, they see this, they come and put BOS here, and they see that the trend has changed. And guess what they do? They start selling here. Now this is the worst mistake that you can make as a forex trader, trading in between reference levels. Now let me go deeper with this right now. So let me give you guys a good structure and make it a bit understandable for you guys now. In a case like this, and you're using a trend following app, because you know that you guys know me, I follow the trend. That's my strategy. I don't go against the trend. I don't do counter trend. I follow the trend. That's the simplest, oldest way to trade. I'm telling you the truth. If you don't know anything about forex and you want to start making money from forex, follow trend. Don't think about them. It's a no-brainer. All right. Now, this becomes my reference low, and this becomes my reference high. For instance, now any other thing happening in between these levels, even if the market likes, let it do like this, I'm not interested on entering this market for a buy until this market comes back to this low that gave us a high. That's simple. This is the only level I'm interested in entering a trade. Why is this so? Because above this reference high and below this reference low is what we call liquidity. And you should understand that this is what moves the market. This guy right here, listen to me guys. You see this market, every single move you see in the market is liquidity moving. Every single time you see the market trending, going to a particular direction, is going there to either to grab liquidity, is going there to deposit liquidity, or is moving from a liquidity. There are three things that the market is going at every single time you see a market moving. Every single time you see a trend, the market is either, number one, going to deposit liquidity, number two, going to grab liquidity, number three, distributing liquidity. Every single time you see 1 pip, 2 pips, 3 pips, every single time you see the market making a move, it is distributing liquidity. That's simple. Either it's going to deposit it, it's going to grab it, or it's going to distribute. The market cannot be doing anything less or more than these three things. It can only be one out of these three things. So when you see the markets like this, for example, now back to this example here, until this market gets to this level, every other thing here is market noise. It is trying to either accumulate at this phase. I'm looking for a level to go grab liquidity to go in the current direction that it wants to go. Now, for instance, let's now discuss how you know a change of trend, how a trend has actually changed. So for instance, now let's say the market is doing like this, and then we get this, like this, like this. At this level now, where the market is giving lower lows, the trend still has not changed. How do you know the valid trend has changed? Is when the market breaks, actually, remember these are reference high, don't forget, and these are reference low, don't forget. Until this market breaks below this level and then fails to give us a high that is going to be above this high. Until this fails and this happens instead, let's say the market comes and does something like this instead, comes into this level, any part of this level at all, and decides to start falling from here. At this point now, this is the level where we say that the trend has changed. Every other thing that happened here prior is not a change of trend. Until we break below a valid low or a valid high or a reference high or reference low, anyhow you choose to call it, then that's when we have actually a change of trend. That's when we say the trend has actually changed. Now, let me tell you guys the truth. My trading changed the day I began to understand these three things I just mentioned. That the market is doing these three things at any given time. It's going to deposit liquidity, or it's going to grab it, or it's going to distribute it. That's simple. Every single time you look at the market, it is doing one of these three things. Now, I might not go into details in how to, get all these things in details, because this is what we discuss in the mentorship program though. But however, the market is doing one of these three things at every given time you look at the market. And for instance, a market like today, a market like this week, not even today now, a market like this week, I've actually not entered the trade this week at all, because every time I look at the market, everything it has been doing since this, I mean, almost all the currency pairs, or every currency pair you're seeing here, everything they have been doing this week has simply been distributing. That's all the market has been doing. Most currency pairs have been doing this week. I've not seen a sound, go, because I usually like taking a trade when the market has deposited or when the market has grabbed liquidity. That's usually my best time to take a trade. And guess what? That's exactly why I entered this trade on USDCHF. Now, I might not go into all the details because, like I said, this is what people pay to learn, but I just want to give you something for you to understand and make sense out of your trading, even if you're not, our student, even if you're not part of our mentorship program. So, for instance, let's look at daily time frame on USDCHF. Now, look at the daily time frame, for instance. Now, this is a no-brainer. This is a downtrend. Very simple. This is a downtrend. Nothing else. This is simply downtrend. Okay. Now, on a downtrend, let's go down to 4-hour time frame. Let me show you guys something now. So we are seeing that, for instance, these are the valid break-up structures that we actually have. So let me mark it from here to here to here to here. 2 reference highs, 2 reference lows so far. Another reference high, another low. Then this low broke above this level, giving us, remember I said that until the market, okay, let me stop here first and then put a line here. So let me push this line to this level. Good. How is this a valid why is this a valid high right now? Because simply this low that we had here, was the one that broke above this high. And then we now have this low that is higher than this previous low, which is giving us a new low. So every other thing in between this level, from here all the way, all these things you're seeing here is rubbish, pure noise, nothing else but noise, just noise, nothing else. This is noise. This high you are seeing here, this low you're seeing inside this region, pure market noise. So you see that since this week started up until yesterday, all the market has been doing has just been simply just accumulating. It hasn't gone to distribute, it hasn't gone to deposit, and it hasn't gone to grab. So today is the only day. Remember that this is the support, this is the resistance, sorry. This is the resistance where I've been watching since the market started this week. And as I usually teach my students, there's something we call liquidity grab pattern. So I've been waiting for it to happen. And this is, let me draw this zone. Well, let me not draw it as a line now so it doesn't confuse you guys. Remember that, support and resistance are zones. They are not lines. So let me draw exactly what I'm seeing. Good. So this is the zone. Let me delete this one. Good. So this is the zone right here. Okay, good. So I've been waiting for the market to actually go grab liquidity from this zone. Remember, but we mentioned that this high here is our reference high. This place I have my grid cursor right now. This is our reference high. And the market now went there to give us a clean liquidity sweep pattern. It happened the first time. There's a way we identify in our mentorship program, there's a way we identify valid liquidity sweep. 2 of the things that out of the 3 things I teach is it should be swift and it should be fast. Every time liquidity is swept, it must be swift and it must be fast. And that happened the first time here, but it wasn't valid enough. This, in fact, I showed it to my students yesterday when we were trading. I told them that this has not happened yet. That I'll wait for a valid liquidity sweep to happen, and that is exactly what has happened here right now. Now, my entry is a bit late because what did I just do? Good. So my entry is a bit late because the best entry for this market actually is this place where I put in a pending order. Remember that this is not an instant execution, this is a pending order. And the reason for the pending order is because we missed the best entry, and I still want to maintain that entry. I don't want to compromise on my entries. I love entering exactly where is the best trade possible. Now, possibilities are that maybe this market might not even get to this entry, before going down, but best bet this market is actually going down, if not for anything, at least to this 0.79 level before going all the way down to 0.79443 level. You get what I'm saying? So the reason why I decided to enter here is because I just want the market to just go back and maybe do small mitigation, you know, of this fair value gap we're seeing on a 1 hour time frame, and then at least let me get a better entry. I can decide to still sell here instantly and I won't be wrong, but it might be a bit too aggressive and my stop loss might be a bit wider than I expect. You get, because at the end of the day this still remains stop loss. So if this is the trade I'm entering now, you're seeing that it's like 1:1. It's not a bad trade. For some of you, if you like, you can actually still enter a trade, enter sell right now as you're watching this video, if the market is still at this level at the time you're watching this video. But as you can see, it's like 1:1.3. It doesn't make any sense. You get what I'm saying? But best bet, this sell will actually happen. I'm maybe about 70% sure. Of course, there's nothing 100% in forex market. In fact, this market can actually still go and hit stop loss, but it doesn't change what I'm saying in terms of probabilities, because 70% of the time what I'm telling you happens exactly the way I'm telling you right now. You get what I'm saying? All right, so I hope this actually helps. I hope everything I said today helps you. Registration is still ongoing for our mentorship program if you want to join, and Telegram group, I usually send signals. For this signal today I sent it on the Telegram channel, so joining is free. Please join the Telegram channel. The link is on the description of this video. And also if you want to get you know, trade with the broker I'm using, the link is also on the description. All right, so that said, make sure you like this video, and if you learned something from this video, please drop a comment. It's usually encouraging to read you guys' comments and be sure that what I'm saying is actually helping. Okay, so I can find out time out of my busy schedules to teach you guys this, to, you know, help you guys get better. All right, so if you enjoyed this video, drop a comment, give this video a thumbs up, and see you guys on the comment section. All right, so bye for now. Have a wonderful day. Bye.